Welcoming you back to crypto's juiciest news. The US Fed has held rates as expected, as was priced in. What's going on with Coinbase, the StableCoin SuperCycle? What did Donald Trump say about Jerome Powell? All that and more coming your way, friends. But first, the Bitcoin price still at around 104 to 105,000 American dollars. We have an indecision monthly candle. Nothing to worry about. We are in that summer lull period of Americana. Everybody goes out, takes off their pants, runs under the water fountains. Selling may go away. I don't think so. It's probably buying may go away, but it's going to be a while, isn't it? This is the Ethereum price chart, still hanging around 2,500. We have to make our way up and to the right to eventually break out of this wedge. That would be a continuation of what we pretty much are hoping for, because our dreams are all going to be made if that happens. This is the ETH-BTC ratio, 0.024, still in Poopy Town, all the way down there. What are you doing, Ethereum? Let's check out the daily chart for Bitcoin. This is the daily super trend, and I have warned my baby dolls to play some Pumpy G music, just in case they try to scam us again. Keep it together. So I'm saying keep it together. All right. Just in case there is some sort somewhere, something like that. All right. Where it just goes down. So just be careful. All right. We don't know if it's going to go down, skits here or whatever. I don't know where it's going to be. All right. We just draw squiggly lines. No one knows. Okay. Hopefully it doesn't do this, something stupid like that. All right. Hopefully it doesn't do, but look, it could. It's just, you know, World War III, fake FUD, Iran is real, not is fake, is real. All of them going through their tumultuous experiences when it comes to battling each other. You have Donald Trump trying to interject. That's what everyone's been talking about, just 24/7 this news cycle. Total domination from this. It's actually quite annoying, but you know, it's like, if you're curious, you know, I mean, like, you already know, friends, it's all part of the business cycle, and the business cycle can't go up. And so you're like, hey, retailers, why can't it go up? If you go talk to them, what are they going to say? Oh, there's war now. There's war. And you might say to them, dude, you've been playing with your Game Boy for 3.5 years. You didn't care about them. You didn't care about them last year. Why do you care about them now? It is what it is, right? This is the total crypto market cap industry. It's at 3.2 trillion. I do believe we're going to go to 10 trillion. I hope we go to 10 trillion. I think we deserve 10 trillion. And why do I say that? It's just because, you know, you put it all together. Real world assets, tokenization, StableCoin SuperCycle. Stablecoins are real world assets, by the way. Real world assets, cash savings. Yeah, real world dollars, which is, you know, I know we call it fake here, but it's actually real. It's kind of funny. That's all part of it. So it's really outside of our control, as we know. That's why you just have to have this, as I call it, the Zen approach here. This is the weekly chart for BTC. And we're still hanging around here. Remember, we still have a green weekly super trend for the Bitcoin. So to me, it's still a bull market. But yeah, I mean, there's two phases of the bull market, right? They crank on the global liquidity money printer. There's that phase. And then is the exciting part where the real bull's horns come out, which is what we're waiting for, which is where the money printer has now, like, you know, a positive flywheel effect, where everyone in the economy feels confident, you know, to start spending. Things are great. But every time there's a new narrative, a new story that gets people feeling good, it's usually to do with technology. Hopefully AI is our big bubble mania that we can get. Very interesting, something I've got in the top left, friends. Check this out. If you grow at 8% per year for 20 years, you get a 4.8x price increase, all right? But if you grow at 20%, so if you increase from 8 up to 20% per year for 20 years, you have a whopping 38x on your price increase. Now, why do I use those numbers? Is because, you see, Michael Chad Saylor believes Bitcoin's going to grow at 20% forever. All right. I am more skeptical of that. All right. Just to show you, right, if Bitcoin grows at 8%, it's a 4.8x. If it's at 20% forever, it's 38x. And that, my friends, is how, say, Michael Chad Saylor can get a $13 million Bitcoin target. And then you, on the other hand, if you're like doing these numbers, you're like, oh, you'll end up at like 1.5 million. Now, the beautiful part is the number's still big. Now, the other kind of non-beautiful part is we're talking about 20 years, right? So I just want to let you know, you can plug any growth rate into anything. You can literally make anything up. But like, it doesn't describe for you what's going to happen in between. You know, is there going to be an Uncle Bobby secular bear market in there where we have like 3 years where Bitcoin can't make a new high? Could be. This is the Bitcoin dominance, still climbing and climbing and climbing forever. Is it ever going to stop? I don't know. You tell me. But the Bitcoin dominance, friends, remember at this point, it's a ratio of how expensive Bitcoin is to altcoins. If you look at the stories, it does make sense, right? You have a Bitcoin treasury bubble. You have the Michael Saylor FOMO, all of these things coming out here. It's basically everybody's coming in. And look, friends, it doesn't matter whether you do leverage or not, even though there is a lot of leverage in Bitcoin. Yeah, other companies, they're leveraging their equities, right? So it doesn't really matter. Markets can go expensive anyway. Okay, like for example, look at meme coins. Memes, there's no leverage in them. Okay, but do meme coins go expensive? Hell yeah, they drop 98%. They can just go have these big speculative manias. Now, I'm saying Bitcoin's going to drop 98%, of course, but I'm just giving you an idea of how the market doesn't really care if there's leverage or not. Okay, you can just get to the point where things get too expensive, or on the other hand, too cheap. This is the OTHERS-btc ratio, still cranking around here. But let's crack on with some news. So, firstly, major loser Jerome Powell holds interest rates, as was priced in already at 4.50%. Obviously, we don't even need to look at the news announcement, friends. The first thing you can do is you just go to, I have my fancy chart here for you, right? This is the US 2-year minus the Fed funds rate. So it's basically the US 2-year is what does the market think the yield is going to be in 2 years? Okay. And then you remove what the Fed funds rate is right now. Okay, the print. So you're tracking that distance. So if the market wants to price in a cut, that number as you just computed here, this will go down. All right, this chart will actually go down. They're like, oh no, the market's starting to price in cuts. If it goes up, they're starting to price in hikes. So right now, look what it is. It's minus 0.39%. So the market is literally pricing in. It goes either 1 or 2 cuts. It's about 50-50, 1 or 2 cuts in the next 2 years. But look how much this deviates, right? I mean, in the midst of the Trump tariffs, it was like between 3 and 4 cuts. And now it's back down to 1 and 2 cuts. You see what I mean? If you go to January 2025, the market was saying no cuts. Whoa. Why is that? Check it out here. So it went up to no cuts. Oh my gosh, what was happening there? Well, it was Trump's inflationary boom stuff. People were starting to get excited, weren't they? Yes, and that was pretty much topped it out. So the probabilities of these, they do shift. And it's because it's also related to the stock market. They're all related to each other. Okay, that's why all these portfolio managers and movers, they do that. So for example, when the S&P 500 crashes, you'll see the rate cut increase go up. So that's what they do. They try to make all these models because you're dealing with like, you know, multi-billion dollar funds. They're trying to scalp basis points and stuff over time. So that's what they try to do. They try to model. They go, oh, when the S&P 500 is like, you know, they might go, when it's 5% below its 50-day moving average, then on like the range of interest rates is, and they go, oh, it's between 1 cut and 3 cuts. So that's what they'll know when the S&P 500 goes down. I just made that just example up. If the S&P 500 crashing towards it, what they'll do is they'll have a model and they go, okay, well, we want to allocate, you know, $100 million to these bonds. If the S&P 500 goes to 5%, but as it goes down lower, they start clipping in. They go, oh, let's use the first 10 million. You know, if S&P 500 is down like, you know, 3%, they'll use the first 10 million. If it goes down another 1%, so now it's down 4%, they'll use the next 30 million, you know? And if the S&P 500 hits like the full 5% zone, they are buying. So they're basically betting on the bonds, cutting, and they'll use all their $100 million clip. You see what I mean? That's how it's pretty efficient. Out here, pretty efficient, but like there's always chaotic and stuff out here. That's how these things get priced in. That's why, friends, if you're watching, if you're reading like junk from Wanker Guru and all these other trash crypto news media and ignoring the highest value content in crypto, you're spinning your own wheels. You're doing yourself a disservice. That's why everyone watches me. I'm literally giving you all this esoteric friendship and knowledge for free. Okay, all these other ones are like, oh my gosh, did you say Polygon's market? Wow. But yeah, you mean the same Polygon that's pricing off the CME Fed funds rate that's priced in with like billions of dollars right now? That same poly market. But look, friends, it's good, okay? The fact that this goes on is huge asymmetric information. Huge. Friends, like soy boy journalists who write soy boy articles about, hey, what gender do you want to be today? Oh, don't look at UFOs. They're totally not real. So those scum who are just lying and just filthy trash, even they know about the Fed funds rates. Just to let you know. They look at the market. This just show you how it's like we're in such a blue ocean in crypto. No one knows what the hell's going on. It's wonderful. This is a Pokeball. Got you. Isn't it wonderful? That's where you want to be, friends. You don't want to be swimming with sharks. You don't want to be in a red ocean area where everyone knows the game. Right? You want to be in an area where, you know, look in crypto, right? Everyone says, oh, Bitcoin's going to 300K. And then Trump tariffs come, they sell a third of their portfolio. That's the environment you want to be in. Even experienced baby dolls, Uncle Bobby Lucas, Ivan the Great. Okay, even if super experienced wealthy people are even having doubt stuff, that means like, yeah, man, it's the place you want to be. You don't want to be in S&P 500 land, right? Because they're whinging over 5%. You see, that's the place. That's how you know we're not the earliest to crypto, but the growth rates are still exceptionally high. Now, Fed Chair Powell, he said inflation effects may take time to assess and expects a meaningful rise in coming months. Okay, so no, he wasn't just talking about his pants. Major loser Jerome Powell speaks after the FOMC decision. You know, it's kind of funny. Sam in my Telegram, he says, wasn't there FOMC today? So Sammy Boo was shocked at how like little it moved. Yeah, man, because no one gives a shit. That's just everything's a theme. Because I know why Sammy's thinking like that. He's like, wait, because you remember 2022 and 2023. You remember those years, right? We were there where every word that major loser Jerome Powell said was like hyper studied and focused in the market. If he said may or must, or when he in one of his speeches, do you remember at the end of 2022, he used the word pain like 6 times, and they go, oh my gosh, he said the word pain 6 times. It was like blasted all over, and we were so weak, and everything was going to zero. Now you're looking at him, you're like, major loser. This is a shitty tie color, sir. Major loser. See what I mean? It's all Fugazi narratives, man. Everything. You're like, no. Even the US Fed. It's all Fugazi. The US Fed just accommodates to what the market wants. Okay? It gets priced in with the billions and trillions of all the insider money. It gets priced in off the yield curve stuff. Okay? If there is something that the US Fed sees where they really have to change course, they start dropping hints. Yeah, they start dropping hints along the way. So, like, what the US Fed doesn't want is where the market thinks there's a 100% chance of a hold, and they go, okay, we're cutting 50 basis points. They don't want that, right? They don't want that. What they'll usually do is if there's something coming on, what they'll do is major loser, he'll send one of his little cockroach henchmen out. You know, like, I've got their names, like Bullard or Kashkari. They send them out and they go just do an immediate interview, okay? And they say, you know, that economy's looking pretty weak lately. Am I right, boys and girls? That's what they start saying. And everyone's like, whoa! And so the funds start allocating to the interest rate decision as that happens midweek, you know, just to shift the interest rates. What we can actually do now, friends, because you're a baby doll and so am I, I'm going to go look at the FOMC decisions. So the next meeting's in 41 days, and we'll just wait for this right here. So the next one as well, check it out. The next one is also look at this, 90% chance of no change, even in the next rate. So we're in July up here. If we go to September, 63% chance of one cut. Yeah, 63% chance. See? So by the end of September, the market's quite smart. Why? Because the market also knows September can be a poop month for stocks as well. You know, this August, September. It's actually quite smart. That's what it's very. People think it's like, oh, just buy because everything's up only. Yeah, it actually that's why so many people don't believe me when I say buying and holding long term beats all of these people, because you're thinking, look at the complex nature of like pricing in probabilities and like, oh, you know that in the past, 30 years, Septembers have been read with like a 75% chance for the S&P 500. So there's a high chance that the rates might be cut in that month because the FOMC, the FOMC, is on the 17th of September. So that's like towards the end of the month. So there's room for the S&P 500 to crash so they can do the cut. You see what I mean? See, it sounds really, really complicated. Like, oh, wow, you're really on top of the game. And then someone like me comes out and says, mogged. You just got to buy and hold long term. You actually outperform all of them. I know, isn't it? It's wild. This is how these things work. It really is wild, friends. That's why a lot of people psych themselves out. They mid-curve it, and that's why, look, you really got to learn how to delay gratification, which all of us have. Pretty much, if you're new here, welcome, welcome. We are all masters of delaying gratification now. As in like, well, when are we going to move? Today, tomorrow, yesterday, when? People who want to trade and make a decision and stuff like it, you're looking for that dopamine kick. So you got to understand this about your body and your brain. If you don't, you don't know what you're doing. You literally, yes, you just the mat in the rays, and the little the scientist is just putting cheese around the maze just to make you move around. So once you know yourself what you're actually doing, you can listen to some angel music, right? Well, that's literally all markets. We're trading emotions and everything out here, right? That's why if you're on like turbo leverage, you can get turbo wrecked. Because now you can't think straight. You can't think in years anymore. You're thinking in days. You're thinking in hours because you get wrecked. You know what I mean? That's what always is happening in the back of everyone's minds. That's why when you DCA spot, long term, your Bitcoin, your Ethereums, your altcoins, you're just playing for that cycle to eventually kick off. Donald Trump said Powell is not a smart guy and probably wouldn't cut today. So he said this right before the rates. He goes, he's probably not smart. He's probably not going to cut because he knows the market's pricing in 99% chance that they won't. I've also got a comment here, very interesting, that I want to share with you. So in my Telegram here, I've got a question from Dr. Pegger. Exactly, his name is actually Dr. Pegger. So shout out to Dr. Pegger. Dr. Pegger has basically said, somebody explain to me how the entire market, even Donald Trump, wants interest rates down. The public wants it. Retail wants it. Institutions want it. And yet, one major loser, Jerome Powell, is saying, nah, interest rates, you're going to stay the same. It feels like he's doing this out of spite. Every time he's asked about his job security, he evades the question. Not even, yeah, it would be good to be the chairman again. What is going on? Very good comment, sir. And then I just want to let you know. So I've been, what I'm about to tell you, I've been saying it in 2022. And no one believed me back then. My stuff has come true, but the people who are around in 2022, a lot are gone. Okay, I know all the believers are still here, but a lot of people just gone. They're going to come back and buy later, right? When the thing's at the highest. So interest rates, they are a reflection of the economy, okay? That's the thing. So the interest rates, they're the cart. The economy is the horse, not the other way around. People think that the horse is the interest rates. It's not. They just reflect what the economy should be. It's the price of money, yeah? So things happen in the economy, and then you have a price of money. So the US Fed can try and move it around, but if it doesn't want to be there, bad things start happening. So what are we actually looking at? Well, the unemployment rate, friends, like I'll just show you, and we're going to keep it very family friendly here. Unemployment is 4.2%, man. Like you are at, just to show you at literally, look how low you are, dude. There is only a few times in history, like this line is so low, right? You're literally towards the best. You see how low this is? So that's what the US Fed is. They're looking at, okay, unemployment is like really strong. Everyone's got a job. Okay, it's an employees market, right? And then you have the GDP of the economy, right? But they don't really need to look at that. They do, but you got the stock market. Okay, so you have literally near record low unemployment rate still, and then you have the king S&P 500 within. Look at this. It's only 3% down from its all-time highs. You see that? So the US Fed, they use that as a signal. They go, okay, if our rates were too high, the S&P 500 should probably be down there. All right, it would probably be like down 12% from here. Yeah, if the rates were too low, S&P 500 might even be like booming up here. It might be up like way too much, but inflation might be high. That's how they look at this stuff. So the interest rates, like I said, they are a reflection of the economy. They're just as the US Fed, they just look at the US 2-year, what the economy needs, and they put that in. Now, obviously, in a nice utopia world, which we don't live in, everything is static, but it's not. Yeah, I know markets are always, you're moving forward. So I know what you're thinking. You're like, hey, historically low rates, man, something's going to crack. I know, but the US Fed's job, it's not to preempt the crack, really, okay? Because that's politicians, man. It's how the game works. You know, it all gets priced into the yield curve first anyway. So the way the US Fed looks at it is like, okay, well, we need bullets, interest rate cut capability if unemployment rate goes to 5.5%. Yeah, so we'll cut one whole percentage, you know, and then if it goes to 6% unemployment, okay, we'll cut another whole percentage. If it goes to 7, another whole percentage. You see what I mean? That's how they tend to think about it. It's just that you and I are frustrated. Why? Because the business cycle still poop. That's what we're looking at, isn't it? We're frustrated because of this. But if you were to step outside markets, friends, just to let you know, there is a PTSD factor with this. Why is this down? Well, look what happened to everybody who wasn't in the insiders club to know that a world-planned zombie virus was going to hit us. Everyone up here, I know, this was just the mania, but look, when we had this collapse, many people started up businesses, wiped out. You know, liquidated, startup businesses wiped out. Like, for example, friends, like Willy Woo. Okay, we know Willy Woo, one of the Bitcoin maxis. Cute Willy Woo. Willy Woo, like, his fund got liquidated right before zombie virus, on the zombie virus. You know, they had like a 3x long. Bitcoin was like, 8,000. I don't know what the average price was. It might have been like 8. You know, and it had cleared up. Just show you, just to give you an idea, right? So you gotta understand this. This is the psychology of everyone in the market. You know, so everyone, right? They're long. Maybe their liquidation, I think, was like 5,000 or something. Right? And then they're long here. Okay? They're long there. Just let me show you what it was actually doing just so you can see it. See? So everyone thought Bitcoin, see that? Everyone thought Bitcoin was just going to be repeating 2016, 2017. It was making these higher floors, right? So after we cleared this was like euphoria for everyone. It comes back down. We had a long reset. Julie, now it's like, it's been like 8 months. Everyone thinks like, oh, okay, cool. So everyone thought they're safe with a 5,500 liquidation. They go, oh man, that's really, really cool. Like, we're sweet. Everyone keeps adding to their position. But then we all know what happens next, right? What happens next is some big, oh no. You see that? Oh my gosh, it's over. Wait a minute. What's happening? This is funny. Right here, friends, Michael Saylor starts buying. Michael Saylor, actually, this is where Michael Saylor bought his first $250 million clip. Up here, now you have DeFi season happened here. Then you have Rectember, and then Arthur Hayes gets arrested here, and now we're about to go up. This is Anthony Scaramucci starts buying. Ivan on Tech starts buying. Oh, man, I can't believe I know all these prices. That's wild. All of them, friends, they're all 100% fact. I didn't make any of that. That was like spot on, exactly the timing of everything. So you see, friends, that PTSD, that's still lurking out there for everyone. So that like shows you, like, even in crypto, right? Even in crypto risk takers, I'm just using the Willy Woo example. Now the guy's never going to do leverage, and he's not touching altcoins at all. Okay, his risk has been blown. Now what he's doing is, that's why someone's got to talk to Willy. Willy Woo, he said he sold all his Bitcoin and now he's investing in Bitcoin miners. Oh, bro, just far out, man. Just bro, it hurts me. Willy, I hope you, no, man, just I can't do anything. You know what I mean? Like, if I knew him in real life, I could go help him, right? He might say, "Who are you, dude? I don't need your help." But just, you're making the wrong move, dude. You're buying the turbo nuclear multi-generational intergalactic top of the Bitcoin dominance purely because you hate risk and altcoins. Okay, you are basically fooling yourself into thinking that's pretty much safe, right? It's kind of like doing DeFi yield on StableCoins, Luna UST, back in the height of the crypto mania, because you think, oh no, I'm safe. Even though a lot of people were in Luna UST, right? Earning a yield, even though they thought a bear market was coming. A lot of people did that. They go, oh, I'm going to park my money and just earn stablecoin yield. Yeah, and that's why we're like, dude, you're in a Ponzi, and if there's a bear market coming, this thing's going to get destroyed as well. You see what I mean? See, that's the other side. That's another example. You're too euphoric. You're willing to, like, you're bending the rules in your mind just because you think, oh no, this isn't dangerous. This is safe, right? When really it's not. More news for you as well, friends. President Trump said, am I allowed to appoint myself head of the Fed? I'd do a much better job than Powell. So major loser Jerome Powell, obviously copping it from everyone and Mr. Donald Trump and stuff, everything out here. But see, friends, the thing is, right, because the business cycle's not going up, we're all looking for reasons. Why? And I told you, like, the most likely reason is zombie virus PTSD. Yeah, they're printing money, everything's okay, but no one's really ready to let go yet. What would make them let go? I don't know. Hopefully it's AI, because AI is the only thing running that's actually, like, changing and blowing my mind every single day, right? So you notice no one really out here wants to, like, really go splurging. So we'll see. Crypto czar David Nutsacks says the stablecoin bill would boost demand for US dollars. In truth, stablecoin bill is CBDC control. This is me talking. It puts a blacklist function everywhere and prevents USD yield from being handed out to crypto holders. So that is, yes, it's unfortunate. The Genius Stablecoin Act, I call it the evil genius, because the US banks want to control everything again. You can't hand out yield on your stablecoin. So what's the point? Honestly, I'll ask you, what's the point? Yeah. If you can't get yield in your stablecoin, what's the point? Okay, you're just like, okay, now you're a bear market hedge. All right, but you're a bear market hedge. So what are you doing with it in a bull market? Nothing. So that's why it's going to be tough, right? Like, I'm just think about it. Okay, in a bear market, everyone goes away anyway, and they're probably not going to pick 99% of the stable coins anyway. If you're scared of a bear market, you're not running to this little bank stable coin, this one on PulseChain, or this one out here. You know what I mean? You're not running to them. You're running to Tether. You're running the USDC. That's it. You know what I mean? So what's the point for the others? Because you're not allowed to hand out yield. So how's it going to play out? PulseChain and PDI hopefully has something to say about this being an unstable coin. Okay, remember, this is not a stable coin. There's nothing stable about it. Okay, stable coin it's going to have a definition. You know, it has a dollar backed in the US bank account. This isn't a stable coin. It's a thing. We've never seen it before. Treasury Secretary Besant says crypto is not a threat to the dollar. In fact, stablecoins can reinforce dollar supremacy. They have been ignored for national governments for far too long. So Treasury Secretary Besanticles is pretty much turbo bullish on stablecoins as well. So obviously what's happened is the crypto advisors have told them, because friends, we all know this. We go, hey, government. I mean, friends, I was making videos for the US government. I'm saying, hey, US government, accept stable coins, come into crypto, and get world dominance over every other nation. You have to be first. Okay, you don't want us using like a yen stable coin. So if you come in, and I was basically saying, oh yeah, and then I just use the stable coins to buy the treasury. I was saying this like 2023. It's kind of funny how it's playing out. But this is where it's all leading to. More US dollar dominance. That's what they want. Analysis shows Bitcoin is following a 3-year growth, 1-year consolidation cycle, suggesting potential 120% gain in 2025 if this pattern holds, marking 205K as the top. So it is right here. See how there's 3 green, 1 red, 3 green, 1 red, 3 green, 1 red. Now we're on 3 green, but we haven't finished the green. Okay, we're only up 12.5%. So if we get, this is kind of wild, right? In these, this is interesting. In Bitcoin, see how each year's 1, 2, 3 of the bull market went up and up and up. See, this one was a failure. This one was a total scam. This one was only, look out, 61%. It was meant to finish higher, but you know, it was just a total scam. It was meant to finish up here. Look at this one. This one's been going down. Oh my gosh, that's wild, man. Isn't that crazy? Just the growth rate is slowing down, friends. So where's it going to land? I don't know. But if it finished, that's why if they said if it finished even around here, that's about a 200K Bitcoin. Remember, we're not locked into any price. Yeah, we want the higher number, but, you know, when Euphoria's here, Coinbase App Store, #1 ranking, I've got exotic top signal videos coming for you, things we think about. Once they start pinging, that's more important than the specific price. XRP has got a spot ETF now on Toronto Stock Exchange. So they do this, I think, as a testing ground. So before an actual ETF gets put in, they list it on, like, Canada. Shout out to all my baby dolls over there in Canada land, the land of maple syrup. Circled shares jumped 10% after the US Senate passed a bill regulating stablecoins. So this is beautiful, man. It's showing you now the market is actually reacting to anything StableCoin SuperCycle. So whenever there's StableCoin SuperCycle or they hear stablecoin bills, people will just automatically buy Circle, which is what you want to see, because we've got the gargantuan participator of that. Wait till the rest of the crypto market wakes up. Coinbase have now allowed USDC to be used as collateral. Don't know why it wasn't before. You know, Coinbase have launched Coinbase Payments, a USDC-based solution for PSPs and marketplaces to enable instant 24/7 global stablecoin transactions without direct blockchain integration. This is basically, it's giving everybody in the world the US bank account, which is what the US government wants. Now, the banks don't want that. The banks want to have access to that. But crypto made the tech. The banks didn't make the tech. If the banks really wanted to do this, they would have made the tech. But they're too rich. They're billionaires and trillionaires over there. They're evil, snake, scum, cockroach gut. They're just, you know, it's a revolving door. You know, it's literally the antithesis of crypto. Shout out to all the wonderful people of Ohio. Your house has passed a bill to exempt Bitcoin payments under $200 from taxes. Now, that is something we definitely need. Once they get part of this stuff nailed down, we can all finally start to see a world where cryptocurrency is starting to make its way and permeate society, making us, you know, a bit later out there in the trajectory of the cycle, but it is what it is. Now, where are we going from here? Well, PulseChain got absolutely murdered. Yesterday, just in one day, someone sold PulseX down 20%. 20%. Click. I don't know who it was. I don't know why. Everyone's joking around. They said, oh, another divorce is happening out there. So everything's getting tanked. If Bitcoin keeps dropping, then yes, of course, we know exactly what to expect. There's nothing else we can do outside of our control, friends. We're just going to have to wait and see. This is the SOL-eth ratio as well. Everyone's complacent about this one. They're like, haha, at least we're not as bad as Ethereum. But yeah, but what if Ethereum gets real-world asset stablecoin stuff and this thing's down here now? Now what? Just to let you know, friends, I think Raoul Powell is long from around here. I think he's long SOL-eth around here. I think so. So it's interesting, right? He was about just a 2x. Okay, just a 2x. So man, if this thing goes down, you got to think about this, dude. If this thing goes down here, all right, now the guy, and think about this, bro. You're only up 50% against Ethereum if it goes down there. That's Raoul Powell, dude. You know, Raoul had 1 million people after him. So that's the thing, man. When markets come up and they distribute, and then you ignore bangers telling you that you're too poor to stay at the Soylana girl's house. You know, I mean, like God only gave you 15,000 chances to exit. Do you think the future of real-world assets, tokenization, and stablecoins, do you think it's going to be on the chain where there are literally sewer rats in pump fund JPEG trash rinsing everybody out? Do you think that's the world? Or do you think it's the world where they literally have all the stablecoins on there? 55% of the entire crypto space is on Ethereum. And then you have a big part on Tron as well, Justin Sun's bribed his way in. You know what I mean? Who's the government gonna come towards? Makes you think, right? Like, subscribe, belly button, all. Catch you soon.